Hello, and welcome to another episode of the Seasonal Tokens Podcast, where Polar interviews people so you can do more investing and less gambling.
Hello everyone, it is Paul here, the CMO of Seasonal Tokens. And today we have another special guest. We have Zach Winner, a former attorney, corporate executive, and full-time investor. So welcome, Zach.
Thank you, Polar. I'm glad to be here.
Thank you very much for accepting my invitation. Like I said in our conversation before we started the recording, it's a real honor for me to have you here.
Thank you. Yeah, I'm really excited about the podcast. Looking forward to it.
Perfect. So let's begin with the standard. Can you introduce yourself with a few words?
Sure, I'd be happy to. So my name is Zach Winner, and as you indicated, I am a licensed attorney, but I haven't practiced law for a number of years. I really am focused solely on real estate investing, and I invest in two assets, real estate and digital assets. So I've been investing in real estate for over 30 years. And in 2017, I started investing in crypto. At the time, I was investing in Bitcoin and Ethereum and a few altcoins, but eventually I shifted over to focusing solely on Bitcoin. And now I invest in Bitcoin and do Bitcoin mining. And I have a couple of investment companies. Cornerstone Investments is a company that I have for real estate and crypto investing. And I have investors that invest passively alongside me in those investments. And then I also have a separate company called Prosperity CRE. I'm one of the two co-founders of that company, and that one is focused solely on commercial real estate investing. And there as well, we bring in passive investors to invest alongside us.
Yeah, amazing. So I hear a lot of things that I would like to ask you about, but because we are a crypto podcast, I'll just focus on the crypto side of what you just said. So first of all, what has attracted you to crypto and crypto investing?
Well, the potential for it to be adopted much more broadly than it's currently been adopted, I think, is a huge benefit. And specifically with Bitcoin, looking at the amount of institutional adoption that it's already had is a tremendous, I think, benefit to that particular type of crypto. You know, it's a $600 billion asset. And just in the last 3 months, we've seen both BlackRock and Fidelity Investments issue press releases that they're now opening Bitcoin as a new investment for their investors and their fund managers. And if you think about it, just those two entities have $13 trillion as assets under management. That's a huge amount. So if just 1% of their assets under management gets diverted over to Bitcoin, that's $130 billion of additional market interest that I believe will continue to strongly drive up the price of Bitcoin. So what I'm particularly attracted to in Bitcoin is the extent to which it's being adopted as a new investment vehicle, a new store of value.
Yeah, it totally makes sense. And when I read for the first time the news that these two companies are also joining the party, like I felt like goosebumps, like I felt so well that things are going to happen, like the big bulls are coming and all these guys that have put their life savings in Bitcoin will be finally happy and will finally be able to fulfill their dreams, if I can say that, which is amazing because who doesn't need more happy moments in their life, right?
Exactly. That's exactly it.
Yeah, so it's amazing news and I'm sure that things will get better very, very soon. So like you said in your introduction, you are doing real estate investing and also crypto investing. So do you find any similarities between these two types of assets?
Yeah, they both have similarities. They're both appreciating assets, right? So they're both good stores of value. Real estate's a proven hedge against inflation. And for a long time, people were saying, well, Bitcoin's also a hedge against inflation. But as we kind of have seen with this latest bout of really onerous inflation, right? Over here, it's been clipping at like 9.1%. It finally went down just in the latest CPI announcement in the US, the Consumer Price Index announcement, which is why the stock market's been rallying. But as we kind of learned with this latest bout of inflation, Bitcoin's not necessarily a hedge against inflation, but it is a hedge against loose monetary policy. So what we've kind of seen is an inverse reaction to the Fed tightening their monetary policy. But I think, right now it's trading more akin to a tech stock. So if you look at the, Russell 2000 or the NASDAQ or ARK Invest's fund, it has a similar charting pattern. But there's a lot of discussion about that decoupling. And I do think that once the Fed starts to stabilize their interest rate hikes, and eventually, they're going to have to start printing money again, that's going to really excel the price of Bitcoin again.
Yeah, it totally makes sense. And from what I hear, you are more behind doing crypto, but also real estate. Am I getting you right?
Yes, that's right. So I invest in just those two assets. I'm not really playing in the stock market or, other commodities. I'm really focused on real estate investing and in Bitcoin. So with real estate, that's how I got my start, and it's a very good asset to invest in. But the returns are good. They're good, solid returns over time. And the way I invest in real estate is I look for opportunities where I can acquire the asset, let's say, for example, it's a large apartment building, acquire the apartment building, look for ways to increase the ongoing cash flow. So that's typically upgrading the apartment units and then renting them for a higher monthly rent rate. And that increases our net operating income. So we're increasing our cash flow, and by increasing the net operating income, we're exponentially increasing the overall value of the property. So we're getting very good cash flow while we hold the property, and then we're forcing the appreciation of the property by increasing the cash flow so that we can sell it for a very nice profit. So that's a typical strategy for us with real estate investing, and the returns can be very good. We target an average internal rate of return of at least 14 to 17% a year for our investors. Now, that's very good. But on the other hand, if you compare it to Bitcoin, which is a much more volatile asset in the short term, but in the long term, it's much, much more profitable. The asset's appreciation rate is exponentially higher. So, for example, in the last 10 years, Bitcoin has appreciated in value 218,000%. So on an annualized basis, that's 218% of value appreciation a year. So I think it's important to have Bitcoin in your portfolio, and I'm a big believer in it. So I have a pretty big percentage of my portfolio devoted to Bitcoin. And as I mentioned, we're Bitcoin mining now. So every day we're adding to that holding position.
Okay, yeah. This actually is very connected to my next question. I don't know about you, Zach, but I'm not a very technological guy. I'm more a marketer guy. And I know few things here and there when we talk about technology, but I'm definitely not a technology guy. That's why I stay away from Bitcoin mining and things like that. So my question for you is, Zach, are you a technical guy, or you have found another way to start your Bitcoin mining journey?
Well, I'm not technical in the sense that I can't run my own mining machines, but I recognize that mining is a great way to get into Bitcoin if you can figure out the technical aspect, right? The average cost to mine one Bitcoin, if you look industry-wide, is between $12,000 to $15,000. And if you compare that to the current price, I think Bitcoin's trading at somewhere between $23,000 to $24,000 today. You can see that if you're able to mine Bitcoin, you're getting it at a significant discount to the market rate. So what I did was I started personally mining, and I acquired a number of machines. And then I found what's called a hosting company, which is really a data center devoted specifically to Bitcoin mining. And I had my Bitcoin mining computers shipped to the hosting company, and they set it all up. And then what you do is once it's set up, you identify a pooling entity that you're going to join to pool your computers with other Bitcoin mining computers so that you're all working together to make sure that you're getting Bitcoin every day. And then every day I get Bitcoin delivered to my wallet. So that was my first foray into Bitcoin mining. And once I did that, I began to research ways to optimize it, to figure out, okay, I'm making money every day, but how can I scale this up to a more institutional level? And how can I optimize this by getting much better pricing on the cost of electricity, much better pricing for the hosting company or data center, and what's the latest technology? I did a lot of research into that over a number of months and was able to basically figure out that the best technology for Bitcoin mining is immersion technology, right? That's where you have these big tanks filled with non-conductive fluid. You're taking your Bitcoin mining computers, called ASIC computers, and you're retrofitting them so that you can operate them at a very, very fast rate, which means you're going to be generating more Bitcoin. And you immerse them into these immersion tanks. And that does several things. One, it keeps them cleaner. They're not being cooled by air. They're being liquid cooled. So they don't break down nearly as much as air cooled mining computers do. So you're online like 97, 98% of the time. So that means more Bitcoin. But the other big thing is you're able to optimize them through what's called overclocking. So you're operating them at a much faster terahash per second rate, which means you're generating much, much more Bitcoin. So this all goes towards increasing your overall profitability rate. So the immersion cooling plus operating at scale. So we have a current Bitcoin mining fund where we are operating a 1 megawatt Bitcoin mining project. And once you scale up to 1 megawatt, which equates to 180 miners, you're able to negotiate very, very competitive power purchase agreements and hosting agreements. So, for example, the power purchase agreement is a long-term electricity agreement where you lock in the electricity rate from electricity provider. So we're looking at paying 4 to 5 cents per kilowatt hour, which is incredibly low. For example, if you look at some of the consumer, hosting companies like Compute North or the other big ones, Wadham, you're looking at paying, 8, 9 cents per kilowatt hour. And so we're getting a huge discount on the cost of electricity because we're operating at scale. We're doing the immersion cooling, which really helps us optimize the performance. And we've got a very, very good agreement with our hosting company. And the hosting company is an essential key because they need to make sure that the machines are running to their full capacity all the time, because that's really how you're making your money.
Honestly, Zach, all this sounds very enthusiastic to me, but still probably 20% of the things that you just said, I didn't understand very well. But it's fine. I'll continue living like that for now. But I think that this is the best way to do it. Like, if you're going to do Bitcoin mining, you should constantly search for ways to optimize it, reduce your prices, and get more Bitcoins because of your mining. So I think that you're definitely doing the right thing. But I believe that you are a technology guy, at least in my eyes. I don't know how it is in your mind, but for me, you're definitely far, far more technological than me. So that's great for you, not very great for me.
Well, thank you. Thank you. That's the reason we formed the fund. Is I think there's a lot of interest in Bitcoin mining. People recognize that you're really getting Bitcoin at a discount. You're able to dollar cost average into Bitcoin mining, right? And the cost of mining is very stable versus the cost of Bitcoin on any given day is very volatile. So it's a great way to dollar cost average into Bitcoin on an ongoing basis, whether the price of Bitcoin is 24,000, 30,000, 100,000, 150,000, et cetera. You're still earning Bitcoin every day. And so the the purpose of the Bitcoin mining fund is people who are interested in accumulating Bitcoin through mining are able to do so even if they don't have the technological background. So they could just invest passively with us and earn that Bitcoin on an ongoing basis.
So maybe because it sounds very interesting to me. Like I said, I'm interested in Bitcoin mining, but all these how you said, liquid things
Yeah.
and these risks and things like that, they make me feel scared a little bit, but I definitely would be more than happy to support if this is some sort of support of growing this cryptocurrency, how to say it, getting mainstream by joining people like you. So can you share more like how an ordinary person like me can, for example, join your fund?
Sure. Yeah, happy to. Thank you. So if anybody's interested, they can go to my website or reach out to me. My website is cinvcre.com. That's cinvcre.com. Or they can feel free to reach out to me by email, and that's zw@cinvcre.com. And basically, the fund is called a 506B private placement memorandum, and investors invest passively, and they'll have an ownership interest in an LLC, basically, that owns and operates the Bitcoin mining operation. And the way it'll work is every month, fund will be generating Bitcoin, and at the end of each month, we'll sell enough coins to pay our ongoing operating expenses, which are primarily the hosting company and the cost of electricity. And the remainder is distributed to the investors. So each investor will have their own wallet if they want to get their proceeds in Bitcoin, and will transfer their pro rata share of the profits each month to their wallet. If they want to get their distributions in dollars, we'll convert their pro rata share to dollars and distribute that to their bank account. So it's a very straightforward process. The fund, we're anticipating it will last for 7 years. And at the end of that term, we'll close the fund down, we'll sell the machines and return any proceeds to the investors. And then we also will have a capital reserve expense account to cover any expenses if we need to pay, and any excess funds from that will be returned to the investors when we close the fund as well.
Nice. And 2 questions. Is there a lot of paperwork included? And second, is there a minimum amount for starting this partnership?
Sure. So on the first question, so everything we do in the US here, this is a public offering. So it has to be in compliance with the Securities and Exchange Commission. So everything we do is compliant. And so this is a formal, what we call a private placement memorandum. And that's the document that investors sign. And then in terms of, what was your second question, Polar?
About the minimum amount for starting.
Yeah. The minimum investment is $50,000. So the total raise for the fund is a little under 1.2 million, and the minimum investment is $50,000.
Okay. So from what I hear, I suppose it will be not affordable for most of the ordinary people, but at the same time, I think it's a great opportunity for those that truly believe in Bitcoin and want to prepare something or save something for the future generations. So it's up to everybody to decide if this is for them or not. But thank you very much for explaining that. I suppose we'll have some listeners that may be interested in that. So like I said, Bitcoin mining is definitely a great opportunity, but at the same time, people like me truly believe that crypto investing is also a great option to be part of the crypto world. So I have this question for you because you are doing both of these things. So Bitcoin mining or crypto investing if you're just starting out?
Well, I think, I really think it's a comfort level thing. It's a due diligence thing. And so, I think if you're just starting out, I think it's important to do research before you jump in and know what you're investing in and know why you're investing in it, right? So, for example, with your seasonal tokens, it's got a very good thesis right around it, and it's got a very good value proposition. So I think it's important to understand why you're investing in it if you really believe in it. And I think really believing in it is important. And I also think, well, what's your investment strategy? Are you a long-term holder, or are you looking to just essentially trade it either on a short-term basis or a swing trade or a seasonal trade? Like for me, for example, I'm a long-term holder because I really believe Bitcoin is going to go up in value significantly from its current price. It makes sense for me personally to accumulate Bitcoin through Bitcoin mining because that's probably the best way to accumulate it, because you're getting it at a significant discount to the market price and your dollar cost averaging into it. So that's my personal preference. But I think everybody's different. And I would just impress that, whatever you decide you're attracted to do your homework and don't rush into it and do your due diligence.
I absolutely agree with you. Like, you shouldn't listen what others are saying. You just have to do your research and do what you feel is the best for you, because otherwise in the end you're going to blame others for your own decision, which is totally wrong. I think that when we talk about investing and actually everything in life, you should have your full responsibility of your actions. And if we are talking about money, it is even more important, especially if you have a family and they somehow depend on you. So yeah, do it like they say in the song, think twice. Like,
that's right.
I think that,
yeah.
yeah. Whatever you decide, like, think twice. Maybe it's not the best decision. Like, sleep over it. Maybe in the morning you have a better idea. So Zach, you said that you have started with crypto investing in 2017, if I'm not wrong, because I'm not the best person in.
You're absolutely right. 2017, I started buying.
Yeah, remembering dates. Like, I'm definitely not the best guy in that. So I suppose that during these 5 years, you have done some things that you probably feel that they're somehow mistakes of yours. Maybe I'm wrong, but are there mistakes that you have done in crypto that you think have costed you a lot, but at the same time you have learned a lot because of them?
Well, I haven't made any mistakes that have cost me a lot, but in the sense of lost money. But when I first started investing, I started buying Bitcoin, and then I bought Ethereum, and then I bought a few altcoins. And those altcoins, I was a long-term holder for all of these. That was my strategy. And as you know, the altcoins are much more volatile than Bitcoin. And when we entered the bear market after 2017, the altcoins dropped in value by like maybe 95%. So I ended up, I had a few. I think I had Litecoin and I've forgotten the names of the other two. But anyway, in the last bull run, sometime last year, I sold those altcoins, and I ended up combined getting out for about break even. So, from a actual dollar loss standpoint, I didn't really lose money. From a time value of money, I certainly lost time that money was locked up over that 5-year period. But my lesson from that, because it's all a lesson, right? It's a life lesson, was for me personally, given my personal investment strategy, I chose not to invest in altcoins again during this latest bull run, to focus really on Bitcoin. And then I also, because I kind of became a Bitcoin maxi or maximalist, I also converted my Ethereum over to Bitcoin. So
okay, so no altcoins anymore, only Bitcoin for you.
Yeah, that's my personal preference.
Okay, that's great. Yeah, you're not the first person that is saying that, and I totally get it. Like, Bitcoin has proven itself for so much time, and at the same time we see that it has been adopted the most from other coins that we have, and we have thousands of altcoins out there. So it's definitely hard to pick a good one, and this is one of the reasons why we have actually started this podcast, so we can help people to navigate this stormy world of cryptos, and they can make their decision if they want to focus only on Bitcoin on top 100 or do something else, because there are so many strategies out there. So like you said, there are bull markets, but there are also bear markets, and you are a big Bitcoin believer. So is there any change in your investment strategy when the bear market comes?
Well, because we're buying holders, we take a step back. So what's interesting is people say Bitcoin is so volatile, right? But if you pull up Bitcoin on a monthly chart, it's got a very nice recognizable uptrend pattern. And as you know, these 3 prior halving events were followed by very strong bull markets. And then there's a pullback and then, a stabilization period. But then when the halving events happen again, there's a strong bull run. So, I like to take a step back and not get overly emotional about the daily volatility. And the monthly chart is a great way to do that because it's so clear to see the pattern.
Okay, so what you're saying is that when the bear comes, you just zoom out and relax.
Yeah, because I'm not well equipped enough to say, here's the top I need to sell right now. Here's the bottom I need to buy right now, right? And if you're accumulating Bitcoin through Bitcoin mining, you're just clipping it off and taking a little bit more every day, and you just continue to accumulate through the bear and the bull market, And because your cost of accumulation is pretty stable because the cost of mining is stable, over time it's going to go up. So it kind of, I don't know, it's a more Zen approach.
Absolutely. I don't know if you have noticed, but lately, because of this, let's say, a little bit longer than expected bear market, there was a topic that was going on everywhere in all social medias around people that are doing crypto, and it is mental health. What is your opinion about that?
About mental health?
Yeah, and cryptocurrency.
Oh, in terms of people getting too emotional about it?
Yeah, exactly. There are a lot of people that have even committed suicide after this Luna crash thing. This has somehow even pushed the things more in that direction, that there is actually a very big danger ahead of these very big crypto believers, that there is even risk for their life.
That's sad. Yeah. I think I'm more conservative than a lot of these crypto players that are looking for much, much bigger returns than you can get if you just invest in Bitcoin. And I think, higher return, higher risk to a large extent. And, as we saw from Celsius, right, and Three Arrows Capital, they were heavily, overly leveraged. Yeah. And of course, that wasn't being disclosed, but that's what resulted in that crypto crash, was just the over leverage and the over speculating, and that'll affect your emotions, So I think it's, anytime you're day trading, it can get very, very emotional, right? And if you're day trading in crypto, you have even more volatility, so that affects your emotional state. And on top of that, if you're leveraging, if you're on margin, so you can get a margin call and get your whole account wiped out in minutes, that can really impact you. So, I think it depends on your particular strategy, but to the extent that you're really engaged in these highly speculative activities, I could see that very much impacting your emotional state.
Yeah, absolutely. You are bringing a very important point that honestly I haven't thought much about. That actually probably the biggest issue is coming from the fact that those investors that felt really bad, except those with the Luna crash, I totally understand them, but those that have felt really bad because of the bear market are those that have been expecting to become millionaires in a month or two or something like that, right?
Yeah, exactly. And I think it's, you got to be in it for the long game, right? It's a marathon, not a sprint. And I think you can get rich from investing in crypto, but not necessarily get rich quick. That's what I say with real estate too. I mean, there's lots of ways to make money in real estate, but it's not really a get rich quick scheme. It's get rich over time.
Absolutely. And I think that this is the less volatile way of getting wealth, because actually this is the end goal, right? To increase your wealth, not to become rich, but to become wealthy.
Right. Yeah. Yeah, I agree with that distinction.
Yeah, absolutely. So when you said this thing about the quick rich scheme, it reminded me about a saying that we have in seasonal tokens, is that when someone is asking us, is it possible to become rich fast with your project? We always say that our project is for those that are seeking for get rich slow, not for others. So, and I think that the idea behind Bitcoin is somehow similar or probably the same. So, like you just said, Zach, you are a very big Bitcoin believer, which is great and understandable. And I'm sure that you have heard many things about Bitcoin, good and bad, of course. So, I'm more interested in the myths that you have heard. Have you heard a lot of myths about Bitcoin that you think people should know about and we should bust them right now?
A lot of what?
Myths, like common myths.
Oh, myths.
Yeah.
Like myths.
Yeah.
Yeah. Yeah, I have. I mean, there's some myths out there like, we're going to have these very fast computers that are going to be able to crack the wallet keys, and then that's going to cause everybody to lose their Bitcoin. And, that's a big myth out there. The cryptography in Bitcoin is so complex. Computers will be able to hack into nuclear power plants, into electrical grids, far, far sooner than they would be able to hack into Bitcoin wallets, right? Because the cryptography is just so much more complex. So that's a big myth out there that I see. Another one is, Bitcoin is using so much electricity to mine the Bitcoin that it's horrible for the environment. Well, in fact, the banking industry uses much, much more electricity than Bitcoin does. And Bitcoin is actually better for the environment because it's using very clean energy. It's, for example, our Bitcoin mining fund, we are looking at partnering with the natural gas provider. They're currently flaring excess natural gas into the atmosphere, which is what natural gas providers do, right? If they have excess gas that they're pulling out of the ground that exceeds the capacity for the pipeline they're shipping the gas in, they just flare it into the atmosphere, which is not good for the environment. But, with Bitcoin mining, they can now sell that gas to the Bitcoin miner, convert it to electricity, and it's a total win-win. It's a win for them. They're making money off of gas that wasn't being flared into the atmosphere. It's a win for the environment. The atmosphere is being cleaner, and it's a win for the Bitcoin miner. So that's another big myth that's out there.
Yeah, absolutely. I think that the second one has been one of the most popular myths out there. Honestly, I haven't heard about the first myth that you just said, but I'm sure that there are a lot of people that are very concerned about that, and that's why they are not starting with Bitcoin. But like we said, in most of the cases, like if you don't want to do something, you'll find 1,000 explanations why it shouldn't be like that, right?
Yeah, you can justify, if you're really not into it, you'll come up with a reason why you're not into it. But
yeah, like I'm sorry for what I'm going to say right now, but I'm going to say it, and it is that excuses are like your ass. You always have it, right? So I'm sorry if this is a bad joke, but I think it's very similar with what we're currently talking. So if you don't want to do something, just don't do it. Don't find reasons why not to, just don't do it. Okay, so let's get back to the serious stuff. This is a crypto investing podcast, and mainly, like I mentioned in the conversation before our call, we're trying to help people to navigate this stormy crypto world, because most of people are not investing only in Bitcoin, they're investing in a lot of altcoins, and this makes it harder for them, let's say. So this involves a lot of gambling. I'm sure that you agree with me. So my question for you, and actually this is my most favorite question, and I ask all of our guests here. So Zach, how do you think a person can do more investing rather than gambling in crypto?
Well, I think if you put your emotion aside and you do your due diligence and you really research, let's say you want to invest in an altcoin or whatever it is, whether it's Bitcoin, Ethereum, or seasonal tokens or another coin, I believe you need to be a believer in that coin. And when you believe in the long-term value proposition of that coin, you'll have the confidence to hold that coin through the downturn, right? If, on the other hand, you're just speculating, you think, oh, I'm going to make a lot of money in the short term. If it doesn't work out, you're going to get nervous when the price drops. You're going to sell at a loss, which is what most investors do. But if you really, it's like investing in the stock market. For example, if you really believe in Tesla, right, and you really think, well, this, Elon Musk is a genius and he knows what he's doing and he's revolutionizing the auto industry and he's creating this whole new EV sector. And so you buy Tesla, regardless of what the price of Tesla is. If you truly believe that they're going to continue to revolutionize the industry and grow market share, you'll ride out that downturn. So it's the same concept. So with Bitcoin or with altcoins, if you really believe in that cryptocurrency, you're not speculating, you're riding it out for the long term. And so that's my belief, is to be a long-term holder.
Okay, great. So Zach, do you think that there are also other steps included that someone should take in order to have a higher chance of a successful crypto investment career?
Well, I think, you do your due diligence, with respect to, let's say, Bitcoin and Bitcoin mining. You evaluate, well, do I just want to buy it on the spot market? Do I believe in mining? Do I believe in dollar cost averaging in? You look at it from a timing standpoint too. If you want to drill down that far, right? If you're not going to dollar cost average, if you're just going to say, well, I just want to put a lump sum in, how am I going to invest that? When am I going to invest that? For example, if you were looking at it back at the end of last year, trying to time the market, I think, is always difficult. But maybe if you were seeing everybody talk about crypto and it being hyped up everywhere, maybe you could have recognized, hey, this might be a top. Maybe I should cool my jets, wait and see if the price comes down a little, right? Versus on the other hand, if there's fear in the marketplace, if there's blood in the streets, right? They say that's the best time to buy if you're a long time holder. So with all the negativity from the crypto crash, if you're able to be a contrarian and if you are a long-term believer, that's when Warren Buffett likes to buy, when there's blood in the streets, when the prices really come down, because he's a long-term believer in what he's buying.
Yeah, absolutely. And a very good seller also. He definitely has a lot of information that gives him the right points to sell, or maybe he has his own targets. But yeah, what you are saying is also very important in the perspective of we should follow those leaders that have a long career in investing, not those that consider themselves influencers or something like that, or early experts, because we know that it's rarely the case. And I think one of the problems in our industry right now is that most of the current investors are following these guys and not following the principles of guys like Warren Buffett, Ray Dalio, or guys like that have a lot more experience, and they're somehow written the principles of investing, right?
Right. That's right. Yeah. And I think it is important to look at these older investors who have been in the game for a very long time. So, like Ray Dalio, I mean, he's come out and said positive things about crypto and about Bitcoin. Bill Miller, one of the biggest hedge fund investors, had a hugely successful career in mutual funds, I should say, as a mutual fund manager. And he recently did an interview saying his personal portfolio is just 50% Amazon, 50% Bitcoin. So he's it's just, which I found incredible, but so he's a big believer. But I think, yeah, regardless of who you believe in, it's important to look at some of these old horses who have been in the game a long time.
Yeah, those with proven success, not those that are just talking that are successful, right?
Right, exactly.
Yeah, because this worries me in most of the cases, that there is someone that is saying that he's a very successful investor, but he doesn't show his results. This is the biggest red flag for me in most of these influencers videos. Like it's very scary how people believe these guys, and I don't know if this is true, but I believe that some of these guys are doing that, like talking about different coins only because they want to sell for profit. But this is just my opinion, and I hope that I'm wrong, but I doubt.
Oh, I think you're totally right. I mean, I think that's kind of a scam with a lot of these, altcoins, is the pump and dump, right? Yeah. They pump it up. They're issued tokens before it really gets blasted out and open to the public. Then they pump it up, drive up the price, and dump it. And
yeah, absolutely. But at the same time, we know that there are some people that have become millionaires thanks to this scheme. So it is, for some people it's opportunity. For some other people, it's a very good losing opportunity. So it's always going to be the case, but it's fine. Like everyone has the choice to make research or not to make research and invest blindly. And that's why, like, our goal on this podcast is to bring experts like you with experience of at least a few years that are just not saying like buy this only because I buy it, but because they have their own logical reasoning. And from all that have been part of our podcast, including you, no one has ever said buy this because I'm buying it. Like we all say, do your diligence, make your research, and make your choice. So all the things that we're saying right now are great, but there are always going to be naysayers, those that believe that crypto will die very soon, because people like Warren Buffett, for example, they don't like crypto, and we know that. There are some other big guys that also don't like crypto. So, Zach, when we have all these guys that have a very, very solid influence, what makes you think that the future of crypto is bright and it's going to be sustainable over time?
Well, just on the Warren Buffett thing, what I find interesting is, he said negative things about crypto, and his partner Charlie Munger has had even more negative things. But what's interesting is Berkshire Hathaway owns banks that allow crypto investing. And on the immersion technology, I know for a fact, because they're in negotiations with a company I'm working with, they want to provide the immersion fluid, right? So even though they're saying they're not in crypto, from an ancillary standpoint, they are involved in the industry. But what I see is, in terms of the long-term longevity, at least specifically with Bitcoin, it's been around for 13 years. It's been around longer than any other crypto. It was the first. And the adoption of it has just been trending up tremendously, right? And I think, JP Morgan Chase recently said there's a $600 billion demand, and they see no sign of that abating. And it's just increasing. Like as we talked about, BlackRock and Fidelity are now opening it up. And so that's using Bitcoin as a store of value, but we're also starting to see it be adopted as a means of transaction for buying goods and services with the Lightning Network, right? This layer 2 network where you can essentially for free transfer Bitcoin to other people to transfer funds, which I think is going to totally disrupt the wire transfer and Western Union business, because they charge exorbitant fees to transfer funds. And it's also going to really disrupt the credit card industry as a means for paying for goods and services, because these merchants have to give up 1 to 2.5% of the transaction fee to the credit card companies. And from a consumer standpoint, I don't know how it is out there where you are, but every few months there's fraud on one of my credit cards, and I have to go through this process of contacting the credit card company, looking for other fraudulent charges, canceling my credit card. If I have automatic payment on that card, updating the automatic payment with the other vendors. It's a huge hassle. And so with the Lightning Network, it solves all of those problems. There's no fraud. It's instantaneous. There's virtually no transaction fee. So the Lightning Network is still kind of in its infancy, but it's being adopted at a very aggressive rate. It's something like 43% a year it's growing.
Wow.
So I think that's the means of using it as a means of paying for goods and services. So I think that, coupled with the huge already adoption of it as a store of value, really means it's not going to go away. It's just going to continue to grow in its adoption and usage.
Isn't this somehow affecting the core idea of Bitcoin of being store of value?
It is a store of value, and it's been a store of value, and that's been primarily how people have been buying it, like digital gold, basically, right? But in terms of using it as a means of digital currency, that hasn't really been adopted. They're trying to do that. It's starting to be used. Deloitte this year did a survey of US merchants, and 85% of them said, yeah, we're interested in having Bitcoin as a means of paying for our goods and services. But that's still kind of in its infancy, and it's growing very aggressively, like almost 50% a year. The rate at which the Lightning Network is taking on new transactions is growing, but compared to Bitcoin being acquired as a store of value, it's still a much smaller market, but it will grow. And I think that's what will cause the price of Bitcoin to continue to accelerate.
Yeah, no doubts about it, but here is something provocative for you as a Bitcoin believer. Like we know the gold standard, it's the biggest store of value right now, right? But no one, almost no one, is using gold for paying, right?
Yeah, you can't, because it's not convenient, right? Nobody wants to lug around gold bars,
exactly.
Right? But that's not an issue with Bitcoin, right? I mean, you can have a Moon wallet on your phone and just, okay, there's your money.
yeah, I'm just saying that, because gold can be used like that for payments, like you said, it's not very convenient. That's why, people still believe that it's a very great store of value. When we use Bitcoin for payments, isn't this somehow killing its other part of being a store of value? This is my question.
Oh, no, I don't think so. I think if you look historically, gold, was one of the first forms of paying for goods and services, right? And ultimately, what led to fiat currency was central banks deciding, okay, well, we need to hold the gold and we'll issue paper. So your paper verifies the amount of gold that you have stored with us. And then they decided, well, since we can do that, let's just print more paper, right? And that's what led to fiat currency. But you don't have that problem with Bitcoin. There's only going to be 21 Bitcoin ever produced. It's written in there. Just as your seasonal tokens, it's written in how much and when it's going to be issued. So you don't have that problem with Bitcoin, and you don't have the problem of the difficulties of being able to transport gold, right? Or having to store it somewhere securely, mm-hmm. right? It's digital, so it's very easy to store it. It's very easy to transfer it. It's very easy to carry it to another location.
Absolutely, I agree. So Zach just said that Bitcoin is better than gold. So if you have any problems with that, call Zach. Yeah, I totally agree with what you are saying. Absolutely. In the beginning, gold was one of the main instruments when people have been trading. I suppose it has been more like in coins, converting gold in coins, not just like these bars that we can buy. But right. It's still it has been used for that. But after that, some great people have figured out that gold is limited, but printing is not limited. So we can print and we can be wealthy, but not everyone, just a specific amount of people, right? So that's why let's print and forget about the gold. So And I'm really happy that the Bitcoin is trying to change this, and the whole cryptocurrency, of course, not only Bitcoin. Because the other thing with the printer, at least for me, maybe I'm wrong, but it doesn't sound very fair to me. I'm more like,
Yeah, it's not fair. I mean, to me, it's a very insidious hidden tax, right? Because when you're printing, as we're seeing right now, ultimately what that does is it drives up the cost for goods and services. And so that's a hidden tax, right? So here in the US, they've said, oh, well, inflation is 9.1%, which is really a jerry-rigged number. It's probably, depending on what you're buying, it's probably more like 15%. So that's essentially a 15% tax. Your money is now worth 15% less than it was a year ago. So
yeah, absolutely. So you're working, and while you're working, you're losing money. You're not
Right.
making money, right? So
yeah, even if you get a raise, like if you get a 6% raise, you're still losing money if inflation was 15%. If the price of things you're paying for it went up 15%,
yeah,
you're still losing money.
absolutely. So I think that there will be some people that believe a lot in governments, and that they are doing their best to help people, but I'm not sure that I agree with that. But everyone has their freedom to think what they want. Like, I think that crypto has shown us many times that this is far from the truth. And I think that we can probably talk about it hours. And I'm sure that you can also bring up a lot of facts about that, but this is not the goal of the podcast. And I think that we have been talking a lot about cryptocurrencies, investing, and things like that. And probably it's time for some final words. Zach, what are your final words for our listeners?
Well, thanks. I really appreciate you having me on the podcast. And if anybody's interested in learning more about us and my company, you can come to our website. That's CINVCRE.com, or I'm also on Twitter and LinkedIn.
Perfect. So thank you very much, Zach, for being on the podcast. It's a big pleasure for me, and I hope that in the future we'll be able to make another episode together.
Yeah, I appreciate it. Happy to come back anytime, Polar. Good seeing you.
Amazing. Yeah, and just to mention that all the links that you just said, or other links, we are going to put them on the show notes. So people, don't worry. You don't have to listen the part of Zach saying his website. You are going to see it in the show note.
Perfect. Thank you.
Yeah. Thank you very much for all that have been listening to us so far. I think this is one of the long episodes that I have done so far. I hope that you have enjoyed it as much as I do. So thank you very much again for being our listeners. And I'm Paul, the CMO of Seasonal Tokens, and I'll talk to you on the next episode. Bye.